Okay, traders, today is Friday, February 10th, 2012, and we are looking at the Dow Jones Transportation Average Daily Bar Chart. In a video 2 nights ago, I showed this chart. Basically, what it looked like was this. This day and this day did not appear, and I basically thought we had a little bit of trouble coming our way, and I put this chart out, and I said, traders, is this a signal? We need to be careful. Yes, we're bullish S&P. Yes, we're bullish NASDAQ. But this guy is not towing the line. And I thought it could be a problem. So I was very cautious about us trying to get long today. Well, since 2 nights ago when we looked at this, here's what has happened. We've come out of this channel. So the tranny has never really did what it was supposed to do. In fact, it stayed really rounded right here and just kind of hung out. And that started to give me worry or need to worry. I started to think maybe, just maybe, we need a pullback. So that's why I was slightly cautious in our recommendation today about the downside. And obviously the market is starting to feel some of the weight, and this is what I mean. If this is the leader of U.S. indices, and we play follow the leader in most instances, the markets do, S&P and NASDAQ seem to follow tranny around. If the tranny's not going up, the indices cannot continue their rally. My belief is that ETF traders and funds have been buying NASDAQ and S&P through the roof, not recognizing that the stocks aren't following along. So to me, I thought it's a bit of a problem and something we need to address. So there's that, and then there's the Dow. The Dow was also really not participating in the rally. In fact, it was lagging compared to NASDAQ and ES. As you can see, it almost presented us with a flat top bit of action up here. So that was starting to worry me. Now we fell out of the channel, just like we did in the tranny. We are out of this channel right now. That's not a very good development for the bulls. So we had that. Meanwhile, the markets that were trading look fantastic up until today. I mean, there's nothing you can do but continue to buy this thing if you're an analyst, because the NASDAQ just looks fantastic here. So today you had a 1-day pullback. You may get another one, take us down here possibly, but I wouldn't expect too much out of the downside. Maybe something down here, you know, and that takes us in NASDAQ somewhere, and maybe it'll pop through a little bit. So let's say NASDAQ can get to 2,500 again. I don't think you get much more out of NASDAQ than that, and that's if it's going to give us that much of a drop. As you can see, pullbacks have been stingy, but they've come back to the line. There hasn't been a lot of pullback, but they've come to the line. Another pullback, it's only come to the line. Rallied up, another pullback should only really come down to the line, and that should hold us. Then we have the ES. And the ES, same exact thing. It's just coming back down to test the support. So I don't think we're in bad shape by any means. We're in a nice looking bull channel. And we're looking to test the support down here. Now that's part of any trading activity. If you're in a bull market, there's nothing wrong with being in a bull market. Rally, 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 pull back, backfill, come down to the bottom of a channel. Rally, 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 backfill, come down to the bottom of a channel. Rally some more. Unless it breaks the channel, we're not going to worry about that. If it does, we'll deal with it. For now, we're in a bull market, waiting for a pullback to give us another buy signal. Then you can look at something like the DAX. Same exact thing going on. You know, a little bit of pullback, but maybe not much more. This right here is a channel tightening, really. I mean, you can draw it a different way. Let's take that away and let's do it this way. It really looks like it's just the channel tightening up a little bit. So maybe that's all that the DAX is doing, and it will not get down here. I don't know, but the DAX is in a little bit of a pullback as well. If we look at the Russell, same exact thing going on. The Russell, back to the bottom of its major support channel. If I darken it in, you'll see it's a very nice looking support channel. And all it's done is basically come down, hit it. Every time it has a little bit of a backfill, comes down, hits it, comes down, hits it. You know, and it just rallies back out from there. So here we are. As an analyst, you are not supposed to start screaming, oh my God, it's the end of the world. You look at that and go, okay, we've been in a decent bull market. In fact, you can take this trend line all the way from the bottom. Watch this. We are in a very nice looking market right here. You'd have to take out this white line or gray line in order for any major support to have been broken. The minor support is here, this red one, and that's been holding so far. I don't think we're in terrible shape here, but this isn't the prettiest picture I've ever seen in my life either. So it is time for us to pay attention to the tranny without losing our heads thinking that a big crash is coming. I do not think that is what's coming our way. Then you have bonds. These 30-year bonds, look at what they've been doing, staying inside of this right here, this line and this line. In fact, you could almost tighten that up a little bit and say that the bonds have basically been stuck in this range right here. That to me tells me they are building what I like to call a flat or a rounded top, one or the other. It depends upon how you want to look at it. If you stay flat long enough, you're going to fall out of what this could be, which is possibly a big apex right here. So you may fall out of this if you just keep moving. But I don't think bonds look very bullish here, not more than getting up here. And you get up here, you fall back down. You get up here, you fall back down, and sooner or later it will break out, and then we'll know what bonds want to do next. So for now, I say up by the red line, bonds have resistance. Down by the red line, bonds have support, and that's all we're going to look for. So that's one way to look at the bond chart. Now, let's look at it a couple of different ways. Let's look at this bond chart on a very short-term basis, like right here. Let me remove some lines for you. Very short-term basis, this is an unequivocal head and shoulders. It jumps right out at you. Possibility of a head test comes now on this day. Maybe you'll get up another day or two, hit the yellow line, and come right back down. So you do have that. Then, of course, if you want to look at this in another way, you can grab a rounding top tool and wonder if this is becoming a rounded top up here. This whole area, if you look at this tool correctly, is starting to show us that it may be what you would consider a big rounding top form. If this move that's taking place right now doesn't get above the red, you'll start to head down again, sort of like all of what happened along this area. You sort of hug the line, hug the line, hug the line, got a little bit through it, missed right up here, you tagged the line and came back down. Right here we may be just doing that, and if that's the case, then our rounded top is really building. A rounded top in bonds means that this market just continues to move ahead. The E-mini S&P, but let's go out to a weekly. You go out to a weekly on the E-mini S&P, and there is nothing really to make you think it's not just going to continue to bull ahead. Here's a channel. In fact, let me put a channel tool on there for you. Here's a channel that we're in. I don't see why it's just going to fall out of that channel anytime soon. It's a weekly. We've broken above this major resistance line and have held that so far. Looking good to me. You didn't even get to this high yet of this top, so we need to at least get up there and see what's going to happen. I think this is looking good so far. And ever since you got above that 200 bar on the second test, you got below, got above, tested, and has taken off. The weekly looks great. Look at the NASDAQ. All right, here, let's take a look at this one. In fact, it's the Russell, not the NASDAQ. I want to show you the NASDAQ in a different way. It's very interesting. It might be another chart, though. Running into some resistance up here due to the channel and the top of this line, they all converged sort of right here. Running into a little bit of trouble, but the larger picture is this green line. This is the one you need to pay attention to. Let's get rid of all the other stuff. The green line is the important line here. You got above major resistance, came back to test it on a weekly, and this is the Russell. Don't be confused. That line is key, traders. You stay above this line on a test. In other words, we came back down to test it. If next week we open, hold it, and start to rally, major rally ensues. That means you've broken out of a new level and will now head up probably towards this channel. So I think that that's why I say that we're in a very interesting area or juncture in the marketplace. Now, there's another thing. Look at this market. This guy has been leading the way. Look at what copper did once it got above the 200 bar moving average. Copper has been very strong. Let's break this down to a daily chart. The copper and the 200 bar moving average. When it gets above, as you can see here, it's a pretty good thing that happens. It rallies above, tests it, rallies again, comes down, breaks through. Now what's it do? It rallies back up, tests it here, and fails, and look at the big break. Now that's copper starts to rally back up, and it gets above the 200 bar moving average. Now let's expand on this a little bit. Gets above the 200 bar moving average, and all it's done this week is come back to test it right here. If in fact it holds right there, and the likelihood is it will because it's developing a trend channel here. The likelihood is that is a hold, that is a buy, and it will also be a buy for our U.S. indices because copper has been an economic indicator or a barometer of economic activity in the future. And if copper is moving higher, rest assured, the world thinks the economy is perking up. And if copper holds again here, you will see that our stock market is going to hold as well. So that's what I wanted to show you today in our class, traders. I hope this class helps to keep you in tune with the larger picture. Thank you so much for coming to today's class.
Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided.